All right, let's talk about September 17th, 2024. This was one of those days on Wall Street that gives you a serious case of whiplash. The market got everything it wanted, and then, almost instantly, it was all taken away. So what on earth happened? Let's break down this absolute roller coaster of a day.
I mean, seriously, imagine getting the one piece of good news you've been waiting on for months. That's what happened. It sparked this huge celebration that lasted for all of about 30 minutes before the market did a complete 180. So, what went wrong? To really get what happened, we need to walk through the day's timeline. It was a classic story of anticipation, a huge reaction, and then maybe a little bit of an overreaction. So here's the play-by-play. The morning was dead quiet. Everybody was just holding their breath, waiting for the Fed. Then, at 2 p.m. sharp, the news hits, and bam! Stocks just take off. But hold on, not even 30 minutes later, Fed Chair Jerome Powell gets up to the microphone, and the market absolutely tanks. It was a massive U-turn that left us with a messy, mixed close.
Okay, so let's start with the good stuff. What was the news that got everybody so excited in the first place? Well, it all came down to the Federal Reserve.
And there it is, a 25 basis point rate cut. This was the first time the Fed has cut rates in 9 long months, and it was exactly what Wall Street had been begging for.
And you know what really got the party started wasn't just this one cut. It was the Fed's forecast, what we call the dot plot, which hinted that we might get 2 more cuts this year. Now, to an investor, that's the starting gun. It signals that an easing cycle is officially underway, and that is pure rocket fuel for the stock market. But as you already know, that party did not last long. The good vibes from the Fed ran headfirst into 2 massive brick walls that just completely flipped the script.
So why did that beautiful rally just vanish into thin air? Well, it was a nasty 1-2 punch. First, you had Fed Chair Powell himself stepping in to pour some serious cold water on the celebration. And at almost the exact same time, this bombshell report about China and U.S. tech starts making the rounds.
You know, it's funny how a few words can change everything. Powell's choice of words here absolutely killed the mood. He called the cut a risk management move. Now, that sounds pretty technical, but what he's really telling the market is, hey, don't get used to this. We're not doing this because the economy is weak, and we're not promising more cuts are coming. Investors hate that. It creates a ton of uncertainty.
And as if Powell's comments weren't enough, this story breaks. Beijing apparently told its biggest tech firms to stop buying high-end AI chips from NVIDIA. I mean, this is a direct shot at one of the market's most important companies, and it sent immediate shockwaves through the entire chip sector.
So you've got this massive tug-of-war going on. A rate cut, which is great, but a super cautious Fed and a new front in the tech war. The result? A market that ended the day completely split, with some big winners and some really big losers.
And just to add to all the confusion, the economic data was all over the map. New housing construction dropped, a lot actually, which points to a slowing economy. But then at the same time, the number of people applying for mortgages skyrocketed. So clearly, people are getting excited about lower rates. It's a totally mixed picture.
And you can really see this division when you look at some of the day's big stock moves. On one side, the China news just hammered chip stocks like NVIDIA and Broadcom. But on the other, you had these great company-specific stories. Lyft soared after announcing a new partnership with Google's Waymo. And Workday popped because a well-known activist investor took a massive $2 billion stake. It really became a day of individual stories, not one big market trend.
So, after all that chaos, what are you, as an investor, supposed to make of it all? What's the real bottom line from a day like this?
If you want to boil it all down, it really comes to this. The single biggest positive takeaway is that the rate-cutting cycle has begun, period. Historically, that is great for stocks. The biggest negative? Uncertainty is now off the charts. The Fed is clearly divided, that vote on future cuts was a razor-thin 10-9 split, and this tech conflict with China just got a whole lot more serious. So, moving forward, there are 2 huge risks you've got to keep on your radar. First, this escalating tech fight with China, which could directly hurt the earnings of some of the biggest companies in the market. And second, the Fed is now officially unpredictable. It's tough to know what they'll do next when they don't seem to agree amongst themselves.
Which, of course, leads us with the million-dollar question. In a market this split, where the old leaders are facing new problems but there's a promise of easier money, where does capital go next? That's the puzzle that everyone on Wall Street is scrambling to solve right now.